Sometimes you just come across something that, well, it makes you stop and think. And
Yep.
that's kind of how we felt looking into Aris mining.
Uh-huh.
I mean, here you've got this gold producer, market cap under $1 billion US.
Hmm.
Okay, but then you look at their resources, nearly 20 million ounces of gold.
Yeah, that's a big number.
It is. And that kind of disconnect, it just makes you ask, right, what's the story here? Are we missing something?
Absolutely. And that's really what we want to dig into today in this deep dive. We're trying to figure out, okay, who exactly is Aris Mining? That's TSX, ARAS, and NYSEA, ARA-MM, by the way.
Right.
How are they actually operating, getting that gold out? And maybe most importantly, what could those assets really be worth?
Okay, let's start right at the beginning then. Who are they? Where did Aris Mining come from?
So the company as it is now, it really formed back in September 2022. It was a merger between Gran Colombia Gold and Aris Gold. And the whole idea, the vision, was to create a leading gold company focused on Latin America, balancing what they're already producing with some pretty interesting growth projects down the line.
Makes sense.
And interestingly, that merger also brought in a new management team. Neil Woodyer took over as CEO then.
Would Veer rings a bell?
Yeah, he should. He's got a very strong track record. He was instrumental in growing Endeavor Mining, so he knows how to scale things up.
Okay, so experienced leadership coming in through a merger. They're listed on the TSX and the NYSE American, so they've got visibility. What about the rest of the team? Is that all new faces?
That's a good point. If you look at the average tenure, management's around 1.6 years. The board is about 2.7 years. So yeah, it is, relatively fresh at the top.
Uh-huh.
But, and this is important, the board itself brings some, let's say, heavy hitters. You've got Ian Telfer as independent chair, David Garofalo as an independent director.
Oh, wow, okay. Telfer and Garofalo. Those are big names in mining.
Exactly.
Yeah.
Very experienced industry figures. So you've got this mix, maybe, of new energy from the CEO and deep, deep industry knowledge on the board. Could be a good combination.
Yeah, that definitely sounds like a solid foundation. Okay, so where are they actually digging? Where are these nearly 20 million ounces?
Right now, the main action is in Colombia. They've got two primary underground gold mines there, the Segovia operations and the Marmato upper mine.
Segovia and Marmato, got it.
And just to give you a sense of scale, in 2024, those two operations produced just under 211,000 ounces of gold.
211,000 ounces. That's significant production. How do they actually manage that? What's the operational strategy?
Well, at Segovia is kind of interesting. They use a bit of a hybrid model. They do their own mining, owner mining, they call it. And they figure that'll be about, say, 55% of the stuff going into their mill in 2025.
Okay, about half.
Yeah, roughly. The other half, maybe 45-50%, they actually buy from what they call contract mining partners, or CMPs.
So they're buying ore from other local miners.
Essentially, yes, mill feed. And the costs are different, which is interesting. For their own mining, it's your standard stuff, labor, energy, explosives,
Right.
But for the CMP feed, the cost is really tied to the volume they buy, how much gold they can actually get out of it, and crucially, the spot price of gold at the time.
So that part of their cost structure moves with the gold price.
Exactly. It gives them some flexibility, but it also means, especially with gold prices where they are now, that you've got these two different cost drivers to think about when you look at their profitability. It's not just one simple number.
Interesting model.
Yeah.
You mentioned 2024 production. Did they finish the year strong?
They really did. Q4 2024 was actually their best quarter for gold production that year, over 57,000 ounces.
Nice.
And it looks like that momentum is carrying over. First quarter of 2025, they put out about 55,000 ounces. That's up 8% from Q1 last year and puts them, well on track for their full year guidance. Seems like they're executing well operationally.
Okay, good. Now, beyond just the mining itself, how do they handle things like community relations in Colombia? That can be a really tricky area for miners.
Yeah, it's critical. And Aris seems to be quite focused on this. What they say they're trying to do is build a model based on mutual success with the local communities.
Mutual success.
Oh.
What does that mean in practice?
It sounds like they emphasize, listening to local stakeholders, trying to figure out what their needs are, and aligning the company's goals with the community's interests. It's definitely framed as a collaborative approach.
Which probably helps with stability long term.
You'd think so. It's certainly a contrast to maybe more purely extractive approaches you sometimes see. Building those relationships can really pay off in having a smoother operating environment.
Makes sense. And speaking of the operating environment, what about the political side in Colombia? Any concerns there?
Well, they do acknowledge it, obviously. Colombia has its first left-wing government right now. But they also tend to highlight the country's sort of underlying political stability. Colombia has a pretty strong constitution, a history of peaceful transitions of power,
Okay.
and you often have checks and balances between the different branches of government. That can lead to a more predictable regulatory environment, which, businesses generally like, mining included.
So they are aware of the current situation, but also see the bigger picture of stability.
Hmm.
Okay, let's switch gears a bit. Finances. How are the numbers looking?
Pretty good, actually. Really quite compelling. Q1 2025 revenue was over 157 million US. That's up more than 46% from Q1 last year.
Wow, 46% growth year over year.
Yeah. And if you look at the last 12 months, revenue is over $560 million. That's up more than 22%. Even for the full year 2024, revenue grew over 14%. So consistent growth.
And profitability. EBITDA, net income.
Also strong. Q4 2024 was a record quarter for them financially. They had $22 million in net income and $67 million in EBITDA. Remember, that's earnings before interest, taxes, depreciation, and amortization, a key measure of operating profit.
67 million EBITDA in one quarter. Not bad.
Hmm.
And I think I saw something about record earnings per share too.
You did. Adjusted EPS hit $0.16 in Q1 2025. That was a record for them. And a big driver there, no surprise, is the high gold price environment we're in.
Right. Gold's been strong.
Definitely helping. Their gold sales revenue specifically was $154 million in Q1 25, up 47% from the year before, and adjusted EBITDA. That jumped 134% compared to Q1 2024.
134%. Okay, so the high gold price is really flowing through to their bottom line.
It absolutely is. Significant operational leverage there.
So the present looks pretty solid financially. What about the future? Are they just going to keep doing what they're doing, or are there bigger plans?
Oh, there are definitely bigger plans. Growth is a huge part of the story here. They've got major expansion projects happening that are designed to seriously ramp up their production.
Like what?
Okay, two main ones. First, at the Segovia mill, they're expanding capacity to 3,000 tons of ore per day. That should be coming online in the second half of this year, 2025.
Okay, more processing capacity at Segovia.
Exactly. And second, the big one is the Marmato lower mine. They're boosting its capacity by 25% to 5,000 tons per day. Production ramp up there is expected in the second half of 2026.
Marmato Lower Mine. Wasn't there an update on costs for that?
Yeah, the updated construction completion cost is pegged at about $290 million US. It's a significant investment, obviously.
But the price. What's the production target once these are done?
The target is to get Aris Mining producing over 500,000 ounces of gold per year.
500,000 ounces.
Yeah.
Well, that's more than double their 2024 production.
It's a massive step up, a complete transformation in scale.
Are there other things in the pipeline? Maybe longer term?
There are. They own 51% of the Soto Norte joint venture. That's a huge resource, 8.5 million ounces of gold, and pretty high grade, too, 5.5 grams per ton.
Soto Norte? Is that near term?
Probably not immediate production. They're doing studies now for a new, possibly smaller scale development plan. Results for that are expected around mid-2025. So think of it more as a, significant longer-term growth driver.
Still, 8.5 million ounces adds a lot of potential value.
For sure. And they also own the Toroparu Gold and Copper project over in Guyana, so that adds a bit more diversification, different jurisdiction, different metal mix.
Okay, so expansion's underway, big projects in the wings. How's their balance sheet holding up with all this spending? Can they afford it?
It looks pretty solid, actually. As of the end of December 2024, they had $266 million in cash. Net debt was around $233 million.
Okay, manageable.
Yeah. And importantly, they're forecasting the EBITDA, remember the $67 million in Q4, they expect that to grow to over $300 million for the full year 2025.
$300 million plus EBITDA.
Right. That should give them plenty of firepower to handle the debt and fund those expansions, especially Marmato.
Makes sense. What about their cost per ounce? You mentioned the different drivers earlier. Where are they sitting now and where might they go?
They've been working on costs. At Segovia, the all-in sustaining cost, the AISC, that's basically everything it takes to get an ounce out and keep the mine running. That came down to $4,485 per ounce in Q4 2024.
$1,400 to over dollars. And gold is over $3,200.
Exactly. So that resulted in a pretty healthy AISC margin of over $58 million just in that quarter. For 2025, for their own mining at Segovia, they're guiding for AISC between $450 and $1,600 per ounce.
Okay, still decent margins at current prices. What about Marmato? Especially the new lower mine.
That's where it gets potentially really interesting. We saw an analyst estimate suggesting that the AISC at the Marmato Lower Mine, once it's fully ramped up, could be around $1,200 per ounce.
$1,200 AISC.
Yeah. Now, that's an estimate, but if they hit anything close to that, if gold stays anywhere near these levels,
Yeah.
well, that points to potentially very strong profitability for Marmato down the road.
Okay, let's pull this all together. We started with this idea of potential undervaluation. Under a billion market cap, almost 20 million ounces in resources. Now we've layered in growing production, strong financials, major expansions aiming for 500K plus ounces, eventually lower costs coming. How does that initial puzzle look now?
Well, it looks even more intriguing, doesn't it? You've got those 19.9 million ounces. You've got gold prices, like you said, over 3,200 US an ounce. I mean, COMEX futures were like $3,255 on May 13th.
Just doing rough math, the in-ground value is huge.
It's substantial, yeah. And when you compare that to the sub $1 billion market cap, the disconnect seems pretty stark. Analysts covering Aris seem to agree, generally pointing to them being well-positioned for growth.
What are they seeing?
They're seeing the consistent production, they're seeing the progress on the Marmato expansion, that's a key catalyst, and obviously the support of gold price. Even, some machine learning models looking at all the factors, gold, inflation, financials, expansion, they seem to suggest a, let's say, cautiously optimistic outlook.
So why the disconnect then? Is it the Columbia risk perception? Markets waiting for proof on the expansions?
It could be a mix of things. Maybe the market is taking a wait-and-see approach on the Marmato ramp-up. Maybe there is still a discount applied for the jurisdiction, despite that stability argument we talked about. Or maybe it's just not fully on everyone's radar yet.
So the basic story seems to be a company with a lot of gold, getting more of it out of the ground, making good money doing it, getting bigger, but the market price hasn't quite caught up yet.
That's really the core of the potential value proposition, I think. They seem to be executing well, aiming to increase production significantly, while also potentially lowering their overall cost base with Marmato if they keep delivering on those plans.
Then maybe the market starts to pay more attention.
You'd expect the valuation to start reflecting that potential more fully, yes.
Okay, so let's quickly recap for everyone listening. We've looked at Aris Mining came together from a merger, got experienced leadership, focused on gold in Colombia. They're producing well now, but they're in the middle of big expansions, especially Marmato, aiming to more than double production. Financially, they're benefiting hugely from high gold prices, showing strong revenue and EBITDA growth. And crucially, they're sitting on nearly 20 million ounces of gold resources.
A massive resource base.
Right. And the potential argument, the hook we started with, is that their current market cap, under $1 billion US, might not fully reflect all of that, the current performance, the growth pipeline, and the sheer value of that gold in the ground.
Precisely. It's a story that combines current value with pretty significant growth potential, both near-term with the expansions and longer-term with projects like Soto Norte.
Now, for you, the listener, this is where it gets really interesting to think about. Consider that leverage to the gold price. If Aris succeeds in bringing on all this new production from Marmato, possibly at that lower $1,200-ish AIC, what happens to their profitability if gold stays high? Or even goes higher? Think about the potential torque there as they transition from a 200K ounce producer to potentially a 500K plus ounce producer. What could that mean for the company's value if the market starts recognizing that transformation?
It really raises that question, doesn't it? As they potentially scale up and lower costs, how much more sensitive, in a good way, could their earnings become to the gold price? That potential amplification is something investors, well, you'd need to weigh carefully both the upside and the risks involved.
Absolutely. And this brings us to the crucial reminder. This deep dive, it's purely for informational purposes. Okay. It should definitely not be taken as financial advice.
Definitely not. The mining sector inherently carries significant risks. Exploration risk, operational risk, commodity price risk, political risk, the list goes on.
So please always do your own thorough research. Dig into the company filings, understand the risk yourself, and always, always consult with a qualified financial advisor before making any investment decisions.